Good morning, it's Harvey Jackson. Just going to go through some of the major items that were happening over the weekend. And just prior to the weekend on Friday, the EPA put out released some of the news about the renewable fuels, weather improvements with some rains in Western Canada. Hopefully it's in time and in right places, and a change in positions on the canola and other news. Of course, there seems to be quite a bit happening. Bunge finally got approved through China for the Bunge-Viterra merger, so that will be moving along. Dates are not quite set of what that's going to be, what changes that's going to be yet. But EPA proposes higher fuel blending volumes. There's multiple things that have the RVO, or the renewable fuel volume obligations, was at 3.35, and it's moved up to 5.6 this coming year this year, and then 5.8. You can see later on that we're already meeting just above 5.2, so it's going to be supportive for the renewable fuel. Soybean oil went limit up, so a full 3 cents. So it's expanded limit today on all of the soybean commodities, but it's not trading a whole lot higher than that. But the November canola actually is traded quite a bit higher too, and it's expected that the EPA, even though there's foreign stocks, the canola going into the blending, that it might be exempt because of the USMCA. Just like this text that I got, you'd think it would be negative, but it was actually looking like it's a positive thing, and it could be because of the weather as well. Last week, crush was a little bit better than it had been for the last few weeks, but we're year to date sitting at 88% crush capacity utilization of the canola, and that's putting us at just about 9.8 million metric tons crushed versus a 9.3. So this is where the changes are for the canola market. This three-way, I'm going to tell a few guys just to get the heck out of there and just go long. January futures at 7:30, and then we'll just have to put in our positions at exit at 7:48 and stop loss at 7:20. So the markets do pull back for whatever reason. And again, policy is not something we're going to know well ahead of time. So we anticipate a policy change, and that's what we got on Friday. Israel and Tehran are still fighting, and crude oil prices are on the rise because of it, as it says here, because there's less chances that there's going to be movement of oil through some of the pinch points through the Middle East. You can see here that we're getting warmer and drier here, and then Russia rains. So this is just from the Nutrien website. So it forecasts a little bit more rain in there, and you can see that there's some rain across some of those dry regions in the prairies. This is the last just 72 hours. There's been some rain in there, and then when you get accumulation over the last 10 days, looks like it's still got some gaps in all over the provinces, and just hope that it could be wrong and maybe wash a little bit more of those unsaturated acres there. So just showing a couple different weather models. The WPC showing rainfall in there up until June 22nd, so just up to the weekend. So hopefully that, because that's not a big stretch, that it might be right. Here is your artificial intelligence rainfall accumulation, and here's your ECM. And it looks like there's even more rainfall potential, and maybe too much, but I don't think we're going to say that yet. GFS. And here's just a accumulated precipitation for the last 7 days, and of course this is always delayed information here. So you can see the north is getting some rain. There's been some pockets. Monsoon season in India has actually been I think I reported that it was ahead of schedule when it started, and then taps turned off, and now it's back on. So far, India has received 31% lower rainfall on average in the first half of June. So whether that's going to be significant or not, but the rain's back. So just-in-time rains are sometimes very valuable, and we're going to see if that's the case in Western Canada as well. Oilseeds markets, the canola is up 8 to 9. European rapeseed is basically flat. Soybean oil is up another 2.6 cents, and your soybeans are unchanged, and your wheats are all down. You see this rise here, and no gaps or anything on the canola. This is just the imbalance that I was talking about of the what's generated versus mandated. The mandates are down here, so now that we're moving the mandates up to these levels, it would be a good thing. And you can see that this is a renewable fuel, used cooking oil, tallow, and that is basically going to get excluded from any country other than the U.S. Here's your European canola. It's broke out of that channel, and here you've got your gap on your soybean oil. Soybeans had a nice leg, but it's still not making new highs here as of yet. Your crude oil is just on fire, and I think that's largely because of the conflict there as well. So you got a few things that are actually helping that oil market at the same time, and definitely looks like Canadian dollars trading like a petrodollar, just the different currencies. So the index, U.S. dollar index, goes down while these currencies are all going up. Wheat market is basically sideways still yet, but it needs to break out to be able to get that next level. Same thing on the new crop. And all the wheats are maybe needing a little bit of help there.